Does shorting a stock hurt a company? Does it maybe cause the company to go bankrupt? That's going to be the topic that I talk about here in this video, because I see a lot of misconceptions out there from what I'm assuming to be people that are beginner investors, beginner traders. And I don't say any of this in a, arrogant type of way, because I was the same way when I got started. So I just speak from experience, but hopefully I can share with you what I realize that helped kind of illuminate, okay, how this shorting thing actually works. But like I said, big misconception out there. And one of the misconceptions you can see, and I just took this from one of my YouTube videos, and I'm not going to read the whole thing, but just to read the highlighted part. So he says they being the shorts, thought it was going to be another Blockbuster, Radio Shack, Toys R Us, Kmart, Barnes & Noble. So just think about all those companies. Depending on your age, maybe you've never even heard of some of those companies. But just think about those companies. Remember those companies as I go through the rest of the video. Play that where they never had to cover the shorts, and right here, put them out of business. So this person is basically saying that they, the shorts, have put these companies out of business, right? That's what's being conveyed here. Now, a quick FYI, I don't even know what shorting is, Clay. Why am I watching this video? All shorting means is that you sell the stock first and you make money if prices go down. So super bizarre first time you hear it, but yes, believe it or not, in the markets, you can make money when prices go down. That is known as shorting, being short a stock, maybe being a short-sided trader. But all those mean is you want to see prices go down, because if prices go down, you make money. So because of that, there's, like I said, it's a misconception floating around out there that, hey, that company is doing poorly. That company is getting beat up. Oh, it's the shorts. Oh, yeah, all those evil shorts are the cause of it. And while I can see it at the surface, I now have a business proposal for you. And as I talk to you about my business proposal, you have two choices. You can either do a choice that says, oh, wow, Clay, I think that's going to be a great business, so I want to buy your stock because that's a great business. I think your stock is going to go up because your business is awesome. Or you can say, Clay, I don't really like this business. And it's nothing personal, my friend, but I don't like this business, so I'm going to short. Not because I want to see you fail, but just because I think your business is going to fail. That's not a very good idea. That's not a very good sector to be in. That's just not very good. So again, Clay, I don't want to see you fail, but sorry, that's just a really bad idea. So I'm going to get short because I think that it is going to fail. I think your business is not going to work out, and therefore I think your stock price will go down, which will allow me to make money. So that's the idea here. You're the investor. So for those of you that are Shark Tank fans, I'm about to pitch you a Shark Tank idea, and you have the choice. You can either go long, quote unquote, buy my stock, or you can quote unquote go short, which means sell it, which means that ultimately you think that the prices will go down because it's just not a very good business. So the first step in my business that I would like to propose is I'm going to go here and I'm going to build a factory right there. Okay. So I'm going to build a big factory. It's going to require quite a bit, it's going to require quite a bit of concept. And what we're going to do, what this factory is going to be, it's going to have a bunch of snowmaking machines in it. So you're going to have snowmaking machines in the factory because, my business is I want to make snow. So who is my customer basis? Well, I want to sell to the local population because that way we don't have to ship stuff around. I don't want to deal with any of that. I want to sell to the local population and I want to sell them snow. So yeah, I'm going to need a factory. And in this factory, which again, you can see where it is. And FYI, we're at like a place where 365. That's what it looks like all the time. But within the factory, because I want to sell snow, I need like a bunch of snow making machines. So I'm going to go out and I have a bunch of debt because I'm taking on debt so I can build the factory. I'm taking on debt so I can purchase these snow machines. And so, yes, there is quite a bit of debt because, factories aren't going to build themselves for free, especially when you have to fly out a labor force to go to such a location like this to build material cost. There's quite a bit of debt. And there's going to be debt because, snowmaking machines are not free either, but that's going to be my business. I am in the snow. I am in the ice selling business to, again, the local population, the people that live within let's call it a 50-mile radius of my factory. That's who I want to sell snow and ice to. So my question to you, is this a good business idea? Are you gonna buy my stock because you think my business is gonna explode and succeed and my stock price is gonna go up, so you're gonna make money? Or are you gonna say, no, I don't like this business idea. I think it's gonna fail, and because I think it's gonna fail for whatever reasons you have, well then I'm gonna short your stock because I think that the price is gonna go down. And I want to really reiterate, because a lot of times is, well, shorting is bad because I want to see people fail. No, I'm not saying that anybody wants to see me fail in this endeavor. But there's a big distinction. No, I think you're going to fail and I want to see you fail. Now, if you were to be like, wow, Clay, this is a great idea. But I'm going to go short, and then I want to see you get hit by a bus because that way you're not the CEO, and I want to see the factory explode. Okay, now you're straight up rooting for a company to fail. You like want bad stuff to happen. So yeah, in that situation, you want to see a company fail. But shorts in this situation, you're not doing it because you want it. You're not, shorting my stock because you have some sort of personal grudge against me. You're not doing it because you want to see me fail as a human. No, you're doing it because you think that it's a bad business idea. Now, of course, I would hope the answer to all this was, Clay, that's the worst business idea I've ever heard. I am shorting because I'm pretty sure, it's very, very close to being sure that you are going to fail. And because of that, I'm a trader, I'm an investor. Then, you know what? I'm going to make some money by shorting your company. So let's go back to these other companies here, right? And the reason I asked about these companies, and again, depending on your age, Toys R Us, Barnes and Noble. Is it possible? Again, is it possible that the reason Barnes and Noble failed was not because of the shorts, but was because of the internet, Amazon, online book purchases? Think about Amazon, when you can scroll through a book like right there on your computer. Is that a possibility? How about Blockbuster? Is it possible that it wasn't the shorts that drove Blockbuster out of business? Is it possible that it was this thing known as streaming video on demand? Is that a possibility that that's actually why Blockbuster failed? And so on and so forth. With these companies that have failed, to say that, it was the shorts. No, it was the business model. It was the sector, right? For my business proposal, could I really sit there and blame the shorts for my, ice and snow business in Antarctica? Could I really blame the shorts? Oh, yeah, it was evil shorts. They caused me to, wow, they bankrupted me, the shorts. No, that sounds ridiculous, right? So you don't want to blame and put blame where it doesn't actually belong. And then to wrap all this up, on the flip side, it's not like shorts are guaranteed to make money. And the classic example, a famous example, is, of course, Tesla. Tesla, for a few years, people were saying, again, none of these veterans was like, I don't like Elon, I'm going to short. No, they're like, I don't like Elon's idea. I don't think Tesla, I don't think the electric car, I don't think it's going to work out. And they had their variety of reasons. None of them was, well, Elon called me a name once, so I want to see him fail. No, it was business reasons. It was ideas of why the company would not work out. So nobody wanted to see him fail. They just thought his idea was not good. His business would fail, and they got it wrong, and they paid a hefty price. The market is a very fair place. Just because you think a business will fail does not mean it will fail. And if you are wrong and that business actually succeeds, well, from the short side, you pay the price. You get hammered, you get punched in a big way. And you can see right here. So Tesla, and this is only in 1 year. So the numbers are even bigger, but just in 1 year, Tesla short sellers lost $40 billion in 2020. And again, Elon Musk, his idea worked. His business is working. So some people thought it wouldn't work. He thought it would work. Elon Musk made more than triple that. And that's just the nature of the market. So you can't look at the shorts and say pure evil, because the shorts, due to short squeezes, and I have videos on what a short squeeze is, but shorts ultimately helped Elon make that much more money, because when a short has to exit the trade, when they have to quote unquote cut their loss, they're actually buying. Because remember, you sell first. So when you have to exit a trade from the short side and you have to buy, that is just pushing prices up that much further, which is only helping Elon make that much more money. And you're more than welcome to, there's all sorts of articles out there, because like I said, Tesla and the amount of money that shorts lost on it, is very well known at this point in time because it was such it was not a Blockbuster. It was not a Barnes and Noble. People got it wrong and they paid a hefty price for it. So to bring this all the way back, no, I get it. Shorting sounds bad. It sounds, well, geez, why are you rooting for companies to fail? You're not rooting for anybody to fail. You just think something's going to fail. So you're going to take action on it. But you're not like, looking to show up and do anything that you're just, hey, I think it's going to fail. This is my reasoning that I think it's going to fail. And maybe you're right. Maybe you make money, or maybe you're wrong, like the Tesla people, and you get absolutely destroyed. But to look at any stock price and be like, blame the shorts, oh, that's the shorts, that's just not true at all. You have to be honest. You have to say, or maybe it's just the business. Maybe it's just the idea. Maybe just the sector is doing very poorly right now, right? A snow sector in Antarctica, if I'm only wanting to sell to my local population, probably not a good idea to load up in debt with a factory and all of that. Like I said, I don't even need to go further than that because you understand how ridiculous that idea is. But it would even be more ridiculous if I then said and tried to blame the shorts for why that business idea failed. You would look like, no, Clay, you're definitely blaming the wrong thing. So before you go and just automatically start to think, oh, the shorts, just consider that shorts, yeah, it's, they're thinking that something's a bad idea, but that doesn't mean it will be. So hopefully this opened your eyes. Hopefully this helps you kind of reconsider some things and, just gives you a little bit better of an understanding. Because like I said, when I first got started in the market, I heard shorts like, oh, those are a bunch of evil people. And like I had this conception in my mind that shorts were like always right. They always made money because prices would always go down and because they caused price. And then I realized, that when you actually stop and think about it, there are no guarantees in the market, and that includes for the shorts. But if this helped, hit that like button, leave a comment down below. I don't know, are you somebody that used to think the shorts were really bad? Would love to hear any sort of comments below. But like I said, hopefully this opened your eyes. So hit that like button, leave a comment below, check out the channel as a whole, and hopefully subscribe to the video. And remember, shorts aren't all that bad. First off, thanks so much for watching the entire video. Real quick, before you go, I want to invite you to a live webinar, web class, training, workshop, online event, whatever you want to call it, but it will be me live revealing to you what I've discovered that has allowed me to transform myself from being an employee to being my own boss, including how I had only one losing day out of 73 days in total. I'm going to cover 3 keys that have helped me unlock profitable consistency within the markets. The first key is super weird, but in a productive type of way. The second key is super awesome because it quite literally is wired into our DNA as humans, making it very easy to use. But in a cruel way, this becomes a pitfall for many traders. I'll explain it all though, including how to avoid the pitfall that it creates for some. And yeah, the third key, when you hear it, sounds way too good to be true, but it's not, and I'll show you how it all works. Then at the end, I open it up for a question and answer session that is, again, totally live. Even if you can't make the live session, please still sign up as it will be recorded, and you can go back and watch the replay that I will send you. Click the image on the screen or click the link down in the description box so you can get the date and time and claim your spot, which I should note is limited due to the fact that this truly is a live event. If you have any questions, let me know. If not, I'll be seeing you soon.